Welcome to China Events, I am Jason. As the United States continues to issue U.S. debt, the status of U.S. debt is in tatters. U.S. bonds no longer become the international community are optimistic about the investment of financial products. Countries have also begun to set off a new round of selling U.S. debt frenzy, which can let the Treasury Secretary Yellen worried about the bad. There is news that China may once again sell a total of $840 billion worth of U.S. debt. So far there have been 123 countries began to go to the dollar. Reserves of gold have become hot for a while, and the U.S. doesn't dare to be tough on withholding it when countries are shipping it. Having approached $32.7 trillion on August 15, or more than 124% of GDP, such a large debt increases the risk that the U.S. will eventually be unable to pay its debts and the dollar will collapse, which is why gold and non-dollar currencies, which are the dollar's counterparty, have recently become the main tools of de-dollarization. According to the figures released by the U.S. Treasury Department, the White House revenue increased by 3% in July, but spending also increased by 3%. The U.S. is still facing a shortfall in income, and even the interest cannot repay the embarrassing situation. In this way, the value of U.S. bonds will continue to fall wildly. The Federal Reserve issued U.S. bonds will also become a piece of paper. Countries have joined the selling of U.S. bonds in the frenzy. U.S. official data show that the Federal Reserve is expected to suspend interest rate hikes, but the release of this year may also raise interest rates twice the hawkish signals when the United States of America's two major overseas debtors, China and Japan, performance varied. China continued to sell, Japan in the previous month of big sell-off after a slight increase in holdings. At the same time, overseas investors in the U.S. stock market continued to move higher when a large number of entries, buying U.S. stocks in record size. EST on Tuesday, August 15, the U.S. Treasury Department released a report on international capital flows, TIC, showing that by June this year, Japan is still the largest holder of U.S. Treasury bonds in the region, a total of $1.1056 trillion held in the month, compared with the May position increased by $8.8 billion. This is the fourth month this year, Japan's position increased, but also in May after a sharp reduction in the rebound. May Japan reduced its holdings of U.S. debt by $30.4 billion, the largest monthly reduction since October last year. In the 10 largest U.S. debt holdings of countries and regions, a total of 7 countries and regions in June to increase holdings. Among them, the total position ranked 7th. Ireland increased holdings of $25.9 billion, the largest. Followed by the position ranked 3rd in the United Kingdom, June increased holdings of $11.9 billion, other regions are less than the increase in Japan. 3. Reduction of the top 10 holdings of countries and regions, mainland China's sell-off is the largest, total holdings of Belgium and Luxembourg, the 4th and 5th respectively, reduced holdings of $3.1 billion and $2.2 billion. In the main U.S. debt holdings in the region, Hong Kong, China in June sold $17.6 billion, the largest reduction, followed by a reduction of $15.2 billion in Singapore, mainland China's reduction in the size of the 3rd place. In this view, in June, China's national reduction in the size of the most countries. Total holdings fell to $835.4 billion, a record low since June 2009. Veteran Wall Street prognosticator Peter Schiff. Schiff said, the next U.S. Treasury bonds may be faced with the possibility of a wider range of global central bank liquidation, which may accelerate, including Japan, China and other global central banks to continue to maintain the liquidation of U.S. debt. If uncertainty increases, there is the possibility of zero U.S. debt holdings. Meanwhile, China's momentum to increase gold holdings unchanged. Gold reserves in June was 67.95 million ounces, an increase of 680,000 ounces from May, the 8th consecutive month of year-on-year growth. Not only China, in the face of the risk of inflation, the global government agencies are adding gold investment. According to the World Gold Council in August 12, the latest published data show that since last year, the global central banks have been actively hoarding gold. The first 6 months of this year, the global central banks' net purchase of up to 506 tons of gold, their gold purchases strongly boosted the demand for gold. Many analysts firmly believe that the last half of the year, China is the largest gold buyers to buy gold to reduce the exposure to U.S. debt. China's relevant agencies in the August 7 release of data is also confirming this analysis. The data show that since last year in November, China broke the silence has been 9 consecutive months to send out the purchase, and is a significant increase in gold reserves of new signals, a total of 188 tons of gold purchases, and prior to that, China has been continuously 38 months without announcing an increase in its gold reserves. With the de-dollarization, countries have begun to accelerate the transport back from overseas banks stored in the country's gold. Since the first half of the year, Switzerland, China, Turkey, Poland are accelerating from the United States, Switzerland and other places of the central bank back to the gold to their own central bank storage. The roots of this phenomenon in the Bretton Woods system, the dollar and gold pegged to become the world currency. Later affected by the economic crisis, the dollar and gold decoupled. Gold, no matter what kind of economic environment, is hard currency, and the dollar does not have such value, so with the gold decoupled from the dollar is not the original dollar, transport back to the gold is imperative. According to statistics, there are already 123 countries on the way to dollarization. This process may be accelerated. The BRICS summit is coming up in South Africa, and in addition, ASEAN is considering recommending that the Asian region launch its own unified currency. ASEAN member states realize that through monetary integration they can promote regional economic integration, enhance connectivity, and increase their influence in the global economy. ASEAN has begun to make steady progress in preparing for the South American dollar, laying the groundwork for the establishment of a unified currency in the future. In the South American region, a number of countries have also begun to actively promote the preparatory work for the South dollar earlier this year. This initiative aims to promote trade and economic cooperation among South American countries and reduce the use of the US dollar. By establishing a unified currency, South American countries hope to achieve closer economic ties and improve their position on the international stage. The latest news indicates that the BRICS countries will hold a meeting to discuss the de-dollarization of trade among their internal member countries and explore the possibility of launching a gold-coated currency in the future. As important representatives of global emerging economies, the BRICS countries, by promoting currency diversification and de-dollarization, will enhance their voice and status in the global economy.